The stock market is getting absolutely crushed right now with the NASDAQ going down 12%, the S&P down 9%, and the Dow Jones down 10%. There's actually more room for damage. There's no clarity on the war with Iran, and I'm going to explain how much more room it can go down. And with all the madness, it has sent one stock under 20 bucks that I love, that's HIMS. After the deal with Novo Nordisk, everyone thought there was going to be a big short squeeze, but yet it's still under $20. And lastly, I'm going to go over my $100,000 challenge, week 43. This is the weekly stock update. Let's get into it. All right, so in this weekly stock update, I will be going over is HIMS a buy under $20 after the short squeeze that everyone thought was going to happen and shoot it to the moon. It didn't, and now it's under $20 again. I'm going to go over why I do think it is a buy. And then the stock market update. I put crash on there, but technically we're in a correction, but we are starting to crash a little bit, and I'm going to go over why I think there is some more room to go. I'm going to go over last week's news, next week's news, some earnings, all that good stuff, and then I'm going to go over my $100,000 challenge, so let's get into it. Should you be buying HIMS stock under $20? I did forget to say like and subscribe. The top 3 rewards right now for owning HIMS stock. Number 1 is massive diversification and international scale, right? They bought eucalyptus and Zava, so they are expanding internationally. It says they should have a revenue run rate of $3.25 billion by 2027. Then they have a resilient non-GLP-1 growth. GLP-1 is the weight loss drug. They have a lot of other stuff like mental health, sexual health, dermatology. And it says they still stick with their $6.5 billion revenue target by 2030. They haven't come off that yet. And this was they released their earnings while they were in the lawsuit with Novo, which they're not in. And then strategic pivot to branded GLP-1s, as I just mentioned. HIMS ended its legal conflict with Novo Nordisk, and now they're selling Wegovy on their platform. These are the 3 risks that it has. The top 3 risks are regulatory and legal triple threat from the FDA, SEC, and Department of Justice are all sending some probes on it, but I just don't think that's going to go anywhere now that Novo has made a deal with them. Near-term compounding cliff says this transition of causing temporary growth deceleration because they're not going to be, it says right here, and this is the automatic, what it came up with, the search, was their shift away from compounded oral semaglutide. There's no oral semaglutide. They never even started selling it. And even if they're doing with the shot, they're doing it with Novo Nordisk, the Wegovy. So margins, maybe, right? Margins goes down a little bit. And then extreme stock volatility and short interest. Yes, there was a lot of short interest, about 40%, and this stock is very volatile. It goes everywhere. But as you can see, this was on March of 25th, and it really hasn't moved since then either, where there's still 80 plus million shares that are shorted, about 40% short. So we are still waiting for that short squeeze. We're still waiting because there's no way, right? Their revenue grows, and we just have to wait for some more earnings, I guess. And this is Seeking Alpha. Again, how much short sales rate? You got 85 million, about 40%. So again, these numbers are a little bit different. We have Robinhood and Seeking Alpha, but still you could see a lot of short interest, a lot of shorts. 2.35 billion, so their revenue went up about 60% over the year over year. Their net income only went up 2%, but that's because they're doing a lot of investments. Their adjusted EBITDA went up 80%. Their operating cash flow went up 20%. The free cash flow went down 71% because of investments. Subscribers went up 13% to 2.5 million, and now they're $83 monthly revenue per subscriber. So I ran the numbers, and if you're just doing 2.5 million and 90, you're going to be making around 2.7 billion. So they're going to be doing just fine with how much they projected they're going to be making in this year. And then of course they just came out, with the Novo and Wegovy, right? The pill, the pen, Ozempic, all this stuff, right? Now they have the deal, so that's going to go great. Andrew Dunham, he tweeted out, since last week, thousands of people have signed up for our Wegovy wait list. So that's obviously great news. And then right here, this was March 26th. Our first Novo Nordisk product shipments are headed to homes now. So they're already picking up and going. You can barely see that, right? Yeah, there we go. Right? So that's what's happening. So I do believe HIMS is a buy under $20. Let me bring up the stock really quick. Right, it's down 67%, and actually that's before its big drop. So now it's actually down about 70%. So it's still about, roughly that much, 67% in 162 days, somewhere around there. It's gone nowhere in 661 days, and it's very volatile. You look how much it goes up, then it goes down, then it goes up. That's just what happens. So, it is what it is. I do believe, though, that eventually it's going to just go up and stay up and not stay at these low levels. So I will be buying in the teens, under $20. I'm buying for sure. The stock market update, like I said, NASDAQ is down 12.5% in 58 days. S&P 500 is down 9% in 58 days. And the Dow Jones is down 10% in 44 days, right? And look at how much days they've gone, 0%, right? Since for 252 days, the NASDAQ, S&P 500 is 246, and the Dow Jones 224. It's done nothing. So I actually checked, when you look at it, you look at these numbers, right? We have here 27%, if you can see that. That's how much it went up in 2 years. So the NASDAQ went up 27, S&P 500 went up 21, Dow Jones went up about 14. Well, this is roughly about average. I asked, well, over any 2-year period, what is the average return? And it says, well, the NASDAQ is about 29, almost 30%, S&P 500 is 21, and the Dow Jones is about 19, almost 20%. So we're lower on the NASDAQ and the Dow Jones, and the S&P 500 is actually right there in line on the average rolling 2-year period, right? So we're kind of an average. So I think we still have a ways to go. And I'll explain exactly how much. The historical best and worst, right? So at some point we were up 192%, 99%, 105% over a 2-year period, but these were dot-com bubbles and then the post-pandemic recovery. And then this was the mid-'80s bull market. Both of those had different catalysts of having the best, right? The dot-com and then the pandemic for the S&P 500. But then the worst, we were down 70% in the dot-com crash. S&P 500 was down 51% after the global financial crisis. Same with Dow Jones, 46% down. So technically the worst 2-year window can get pretty bad if you have some pretty bad stuff going on. I just don't think that what we're doing is that bad. I did do something that I don't recommend a lot of people do, but I just had to put my money where my mouth is. SQQQ is basically, if you were to buy SQQQ, it's a bet against the market if you buy the stock. Well, I bought a call option on the stock, and I sold way too early. I sold it within a week. This was a Thursday. Friday it was supposed to be cleared or expire, and I sold on Thursday around, I'm in Pacific time, so 9 p.m. Pacific, 12 p.m. Eastern, and I sold it at $4.55. I bought it for $2.90, sold at $4.55. That was great, right? That's unbelievable. It's almost a 50% return. Basically, it's more than a 50% return within a week. Great, that's great. But this went up to 10. So obviously, if you know how options work, I bought this one option for $2.90, which means I actually bought it for $290, right? And then I sold it for $455. This ended up at around about $10 to $11, right? About $1,000 to $1,100. Because on Friday, if I had held when the market went even more, I just felt like, look, you know what? I still believe that the market has some ways to go, and I just bought this really short term. It expired on the 27th, but I just said, you know what? I'm just gonna sell it because if I can get a 60, almost 70% return, I'll take it. This is the month of March for the NASDAQ. Now, as you can see, it is just Red Dead Redemption. It is not good. The market is just basically, I wouldn't say a free fall, but it's correcting, right? It's correcting, it's crashing a little bit. It's kind of going. So March this year is not going to be, we're going to look back. I mean, yeah, we got Netflix going up 17% right here, right? We got a few, Palantir up 10, Intuit up 16, but really there's not much going on. The AAII Sentiment the survey, we're still at 50 basically percent of bears, right? The bears haven't gone anywhere. The bulls went up, so the bear, it was a little bit of went up 2% on the bulls and 1%, 2% down on the bears. So it's kind of a swap, but really the bears are dominating right now, but it's still not even the high, right? It's not even a 1-year high. It's still 62%. So there's still room for the bears to pile on more. And then we have the fear and greed index. As you can see, we're in extreme fear. We're at a level 10 out of 100, 0 to 100, right? So we're at 10. We're in extreme fear. Last week, we're in extreme fear level 15. And then before that, a month ago, we're in 41. And a year ago, we're at 28. So basically, you could say there's been a lot of fear in this year. And I would say right now, when others are fearful, be greedy, and then be fearful when others are greedy, right? So right now, I'm going to be greedy because everyone else is being fearful, and it just seems like now's the time to start buying because, again, you have to be greedy when others are fearful because this is when people are selling irrationally, right? They're not really thinking about what they're doing. They're just selling. So I will be getting greedy here while we're in the extreme fear. I mean, that's just what it is. In the context of war, the stock market fears uncertainty more than the conflict itself, right? The unknown, surprise conflicts, sustained energy shocks, and recession odds, right? So all of that stuff is kind of in the works right now. So let's go over what happened last week, right? So we had the geopolitical whiplash and the failed peace hopes, right? The peace talks. So the stocks jumped after Trump signaled productive conversations with Tehran, and then sentiment soured by Thursday because Iran said, no, those negotiations aren't happening. So then the reports of the final blow military campaign and ongoing strikes, sent crude oil back to about 110 per barrel, which of course oil right now is a big talk. Number big two thing that happened last week, of course, the stock markets, NASDAQ and the Dow, they're both officially entering a correction. Once you're down more than 10% from its record high, you're officially in a correction, which they are in. S&P is only 9% still. The blue chip pain, Dow Jones Industrial, fell into correction territory, ending the week down roughly 10% of its peak. Technical breakdown. The S&P 500 fell below its 200 moving day average for the first time in nearly a year, a signal that often leads to further institutional selling. There you go, right? But again, it's funny. All three of the right is just everything just fell. And then number 3 is energy shocks and inflation alarms, right? The European Central Bank warned that markets were too optimistic and that the real shock of the war could force rate hikes, which people really don't want. People are saying, okay, the Fed might keep rates where they are, but to have a rate hike would be kind of damaging for the markets a little bit. Corporate fallout, USPS announced its first ever 8% fuel surcharge on packages, and companies like Carnival slashed their 2026 outlooks, all due to mounting fuel expenses. And then the consumer strain, 10-year yield hitting the 4.48, its highest level since before the war began. So, we just got a few economic stuff happening, and we're going to see what's happening next week. Next week's a kind of make it or break it for the March jobs report, right? Last week the last jobs report, we had a loss of 92,000. So we're expecting a modest rebound of 50,000 to 80,000 added. If that doesn't happen, then that could push markets even lower. Unemployment stability, unemployment rate is projected to hold steady. And then the market impact, a second consecutive weak report could confirm firms of war-induced recessions, while a strong beat might reignite concerns that the Federal Reserve will keep interest rates higher for longer to combat energy-driven inflation. So essentially, this is a no-win situation. You're either going to have a weak report where everyone thinks that the war is possibly inducing a recession, or you're going to have a strong beat, but even with the oil price and everything, that now when the market or the economy is looking good, even with oil where it is, now they're like, well, we might as well just raise the rates, raise the Fed rates. So it's like, man, that would be, it's like we're in a no-win situation right now. And then, of course, next week, geopolitical tensions and the Hormuz factor, right? Investors are monitoring the reports of productive but unconfirmed ceasefire talks. Any further strikes on energy hubs, prolonged closure of the Strait or Hormuz will keep oil prices volatile. And then we also have stocks have proven highly sensitive to the geopolitical whiplash, right? Every single time there's something going on with the war that happens, it's any little surprise, right? Iran makes a any kind of conflicting message or responds in a conflicting way, right? Trump says one thing, Tehran says something. Like, once that happens, markets are like, and this is why the clarity, there's no clarity. Once we know that there's officially something that they're working on, then you're going to start seeing the markets go up. Watch. And the last thing that we got to talk about next week is quarter end rebalancing and blue chips earning. Correction watch, the S&P 500 is teetering on the edge of a 10% correction, which I think it's going to go from its all-time highs. And then the key earnings, we have Nike and McCormick. So I do own some Nike. And so these are all the stocks that are having their earnings next week. Really nothing big, nothing exciting except for Nike, right? So nothing crazy. I do believe the stock market is going to go down. I'll take this for a second. I do believe the stock market is going to continue to go down a little bit. In fact, actually, let me... But that is just my perspective of it, where we have plenty of room to keep going. It doesn't mean that it's all going to happen in this week, but I do think it can happen over the next 2 weeks, and then we start to push up again. So that would be really nice to see, right? I would like to see that. The stock market challenge, I am in week 43. As you can see, I mean, it got smaller because that's how small the portfolio is. I am at $6,896.34, and I believe this is the first week that I am under my initial account balance when I started this challenge. So that's pretty crazy. This week was horrendous. As you can see, this is all, it's sorted by weight. So I have HIMS, TQQQ, Celsius, Meta, Amazon, Adobe, right? Those are my top like 6. And these are my, like, you see my top weighted. Those are my only 2 where I'm actually positive. All the other, I'm red. I'm in the red of everything now. Most of these I started positions after I started this challenge, which was in June 2nd. Really, like the Trade Desk, Salesforce, Adobe, MU. I bought all of those in the last couple months. Oddity, I added just a very little bit, right? Its value is only 79, and I've lost 46%. So I bought it for like, less than $150. And it dropped pretty quickly after a crazy spontaneous report. So anyway, what I'm trying to say is, I have a lot of losers right now, but I think this is all going to turn around big time once this market turns around. And I cannot wait. But I am also trying to average down, right? This is my total change. I need to average down. I want to average down on Adobe. I want to average down even on Celsius. This is my 3rd biggest position, but I do want to average it down. As you can see, weekly change down about 10% against the goal. Now I'm down 36% away from the goal. June 2nd, oh, there's some neighbors screaming. June 2nd, since then, like I said, it's the first time I'm under my goal. I am now down -6% from the balance that I had in June 2nd. And if we're excluding all the $50 deposits that I have put in, I'm actually down 38. It's actually more closer to 39%, right? So, wow, it is not looking good. But again, I think all this is going to turn around here over the next 6 months, and I'm going to be deploying a little bit more cash into this portfolio just so I can take advantage of these drops. As you can see, since I started this account, or started this challenge, I'm down basically about 30% exactly, while the Russell 2000 is almost up 30%. That is insane. S&P 500 is 8%, NASDAQ's 10%, Dow Jones 8%. Now, eventually I do think I'm going to outperform. I think these stocks are going to outperform if I average down on HIMS, if I average down on Celsius, if I average down on some of these stocks. I think they're going to be, I'm getting really good cost bases, on all these stocks. But it also goes to show you sometimes that it does pay just to be in the index, right? If you're not a good stock picker, this whole rate of return could be a lot worse. And you're looking at all the indexes and you're like, man, if I had just picked the indexes, I'd be up, right? So, it's never be afraid to invest in the indexes if you don't know about individual stocks and how they really exactly work. These are all the transactions I made. I got out of Fubo. I exited out of Fubo. I ended up with $140, plus because I put in $50. Then, Fubo paid me $350 to kind of, whatever remaining shares from their split. Then I split with them. And so I sold my last $87 of it, and then Meta, I got $1 in dividends, and then I just reinvest. It's reinvested. So thank you for watching. I really appreciate it. Don't know how long the video is, about 20 minutes. But I do believe the stock market, like I said, has some room to go down. It's going to be interesting to see how it all transpires. I do think there's not enough clarity with the war. Donald Trump does pay attention to the war, and he wants the stock market, or Donald Trump pays attention to the stock market, and he knows that he's going to be judged a little bit on the stock market, and right, his presidential performance will be judged on the stock market a little bit. So he doesn't want it to go down too much, obviously, but he doesn't want to be bullied out of this conflict. And that, I think, is, something that presents possibly more turbulence, right? He wants to say things that make the markets confident. But then when Iran comes back and says, no, what are you talking about? That's not right. No, we do not agree. We're not doing that, because Iran's being strong-footed, right? They're holding their ground. So it's like, okay, well, that scares the markets even more, because again, uncertainty. When our president's saying one thing and then the other supreme leader of another hostile country is saying something else, we don't know what's going on. And then the oil, we don't know what's going on. So once there's any kind of clarity, that's when the markets will start to turn around. It doesn't mean that that'll exactly be the bottom, but I do believe, if we don't have clarity within the next month, depending on how crazy the conflict gets, the market could turn around before we get clarity. If we feel like the conflict is in a neutral space where, okay, the bombings and the conflict is not escalating, but we're not necessarily de-escalating and coming to agreements. Maybe some oil is kind of getting in and through the strait, but not that much more really, and it's still just kind of in limbo. I think the market is going to say, this is good. This is good. This is going to be progress. And now at some point we will make a deal. And so the market will turn around. So, but right now there's just nothing, right? We have our leaders, from the opposing leaders of the the opposing sides of this conflict are saying different things, and that's just creating no confidence. And once they say something that's in agreement, I think that's it right there. It doesn't even have to be that they are necessarily agreeing on anything. They just have to be on the same page. Right now, they're not even reading the same book. But once Trump and Iran's supreme leader are just reading the same book and are at least on the same page, same chapter, that's when the market might start turning around. But anyway, that's all I got to say. Thank you for watching. I really appreciate it. Remember, in times like this, it's always good to just stay aware and stay prepared so you're not scared. And then you can just go and make some money. But yeah, thank you for watching. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.